Hey everyone, Intel's near-term expectations are troubled and challenging to be sure, but Intel management team gave investors a lot to look forward to, and I wanted to share that with you in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Intel management saying that semiconductors are the currency that will drive the global economy for decades to come. We are one of two, maybe three companies in the world that can continue to enable next generation chip technologies, and the only one that has Western capacity and research and development. And we will participate in the entire AI market. So a lot to digest there for investors. Number one, competition is limited in terms of the number of players in this market. It's Intel, it's Taiwan Semiconductor, it's Samsung. I don't know if I'm missing any here, but on top of that, Intel is the only one of those three with Western capacity and research and development. And what did you notice from governments in recent months and recent years? They've identified semiconductors as a national security imperative. They want to have domestic production, especially in the US, and the US passed incentives over $50 billion they're going to give out to companies to produce domestically. Now, it's not only Intel that will benefit from that. Taiwan Semiconductor is adding capacity in Arizona and taking advantage of those benefits as well. But Intel will be one of the ones primarily to benefit from that investment in trying to have greater capacity domestically for semiconductors. They go on to say that their core markets improved at a measured pace through the first quarter, and we expect to deliver full year revenue and earnings per share growth in 2024, with the pace of revenue growth accelerating in the second half. The year will start off a little bit slower and accelerate as they move towards the end of the year. First quarter revenue of $12.7 billion was up 9% year over year and just above the midpoint of their guidance. Inventory headwinds impacting Mobileye, Altera, and their 5G customers. And that's really the challenge, two challenges for Intel. Number one, the replacement cycle for computing and electronics hit a bit of a patch, an empty patch, a dry patch in 2023, and that hurt Intel. Additionally, Intel is investing billions of dollars to expand semiconductor manufacturing to add its fabrication facilities or fabs, and that's also hurting its profitability and cash flow. So it's working through some major challenges here that's hurting the company, but management is trying to paint a bright picture for the future, saying operating cash flow in the first quarter was negative $1.2 billion, while they spent on capital expenses $5 billion, resulting in adjusted free cash flow of negative $6.2 billion in one quarter. That's a lot of cash leaving the company. But management did say that Q1 will be the low point in adjusted free cash flow. Things will improve throughout the year in terms of generating less cash outflow. But management saying that the revised structure creates a foundry relationship between manufacturing and our products group, with Intel products purchasing wafers and services from their Intel Foundry at fair market prices. So they're going to separate their foundry business and the products business, and the products business will buy from Intel Foundry at fair market prices. Getting into the foundry business is not going to be easy. They're spending billions of dollars, spending a lot of time and energy trying to develop this business. But if successful, it's a massive opportunity. And to help their efforts, they're getting billions of dollars in incentives from local governments. Now, the products business is doing fine. Intel products revenue came in at $11.9 billion, which was up 17% year over year. And then operating profit in the Intel products business came in at increased by more than $2.1 billion year over year for an operating profit margin of 28% in the quarter. That's an excellent business segment. Intel Foundry is where the difficulties lie. So Intel Foundry revenue was $4.4 billion, which was down 10% year over year. Operating margin declined significantly from the previous quarter, driven by higher startup costs and the conclusion of the traditional packaging business, impacting revenue. What's more, management expects these difficulties to continue, saying the Foundry business, the profit and loss will remain challenged through the year, and we expect operating margins to bottom in 2024 as startup costs associated with the 5 nodes in 4 years peak and the profit and loss absorbs an expected increase of roughly $2 billion in depreciation. But beyond 2024, as volume begins to shift towards leadership manufacturing nodes with a competitive cost structure, the scale improves, including the return of compute tiles to internal process nodes, and our efficiency actions begin to flow through the P&L, we expect to see rapid profitability improvement. So, warning investors, telling them, look, 2024 for the Foundry business, it's going to be tough. Revenue's down, profit margins are going to be lower. We're going to absorb an extra $2 billion in depreciation expense because we added all these new manufacturing facilities. But in 2025, things are going to improve rapidly as we ramp up production. That production is going to allow us to demonstrate economies in scale, and we're going to see our profit expand exponentially. That remains to be seen. But Intel is confident in those prospects, and I would say it's reasonable to assume that it will experience nice growth in that segment because demand for semiconductors is off the charts right now. It's starting to rebound in all areas and all end use cases, especially for artificial intelligence. That's the primary driver in demand for semiconductors, but there's other areas for growth as well in semiconductors. The personal computing industry is starting to rebound, and that rebound will accelerate in 2025 and 2026 as these AI-enabled PCs will drive demand for replacing those computers that were bought in 2020 and 2021 when we were working from home, learning from home, educating ourselves from home. Those computers are going to need to be replaced in a year or two. How much longer can you use those 5-year-old computers? Not much longer, right? So that's another area that will drive growth in semiconductor demand. It could be excellent profit expansion for Intel, with the caveat that it is risky. Starting up a new business like this, spending billions of dollars, it's not an easy thing to do. That's why Intel is facing so many challenges. That's why Intel's stock price has been so challenged. Investors are not very confident that Intel will make the kind of progress that it is telling investors it's going to make. So if it does achieve what it says it's going to achieve, the stock price is likely to be much, much higher at the end of 2025 because investors are not accepting that Intel will deliver on what they're saying they will deliver. They're expecting challenges, they're expecting delays, they're expecting Intel to have to adjust and maybe push out these timelines. And so if it goes as planned, Intel can be in position for an excellent year in 2025 and beyond. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.